In business tonight, Asian markets tumbled after the Fed's cautionary outlook triggered a sell-off on Wall Street. Most major indices closed in the red. Kospi dealing with a double whammy of pressures abroad and domestic political drama at home. Now, the market in Seoul closed nearly 2% in the red. This makes it Asia's worst performing market this year. The ASX also taking a heavy blow amid pressure from increasing bets that the RBA will cut rates sooner and more significantly than initially expected. Hong Kong paring losses but still ending in the red. Overnight, the U.S. Federal Reserve lowered interest rates by a quarter point as expected, but the Fed dialed down expectations for rate cuts next year, given the continued strength of the U.S. economy and as inflation remains stubbornly above the central bank's 2% target. Fed officials are penciling in just 2 rate cuts next year, down from the previously expected 4 cuts. They then expect to make 2 rate cuts in 2026 and 1 in 2027. Now, investors have also been assessing the Bank of Japan's decision to keep its policy rate unchanged at 2.25% for the 3rd straight meeting. The Japanese yen dipped to a 1-month low against the greenback after BOJ governor said the bank will continue raising policy rates if the economy moves in line with its forecast. Japan's central bank ended negative interest rates in March and raised its short-term policy target to 0.25% in July. It has signaled a readiness to hike again if wages and prices move as projected. Now, for more on this, we speak now to Dr. Richard Harris. He is the Chief Executive of Port Shelter Investment Management. Dr. Harris, it's been a rough day for Asian markets here. There is less than 2 weeks left in this year and just a month before a new U.S. administration takes over the American economy. What are your expectations for the near term?
Well, that's a big one because, in fact, we're in a situation where it was interesting seeing those estimates of interest rates falling over the next 2 to 3 years because, quite frankly, we don't really know what's going to happen in the next 2 to 3 quarters. Trump is really a mystery, and we don't really know whether his policies are likely to be good for economies or bad for economies. And, of course, they're going to affect the trend of interest rates. So at the moment, it's really quite difficult to forecast exactly where things are going. And in that situation, investors, the best thing to do is just sit tight, sit on your hands.
Japan has pretty much been in focus lately because of persistent issues in the economy. It hasn't quite been able to get rid of. Is there a domino effect that could impact other countries in the region?
I don't think so. Japan's always really followed its own tune. And certainly in terms of policy over the last few years, the central bank has seemed to do things that the market hasn't been particularly happy with. So I think Japan's not necessarily going to affect the environment. In Asia, I think the biggest concern maybe is an ultra strong US dollar that tends to be negative for Asian markets. But more importantly is the possibility that global growth may slow down. You know, we actually haven't had bad growth in Europe or in the US or around the world. The only element where it's been difficult has been China. So growth has been quite buoyant and has kept markets going. But of course, if markets start falling around the world, as we've seen today, all markets around the world will all sell off for a little bit until they find a new level.
All right, and speaking of political pressures, we would be remiss if we didn't touch on South Korea. They are, of course, experiencing both economic pressures from abroad and domestic drama. How do you see the economy there playing out?
Well, worst performing stock market this year out of the major markets. And it's not surprising with this kind of political issues. You know, we've had a significant turmoil, I think, there, and it's going to take some time to die down. But I always go back to the old Bill Clinton campaign mantra, which was, it's the economy, stupid, because the economy always wins through. And one thing about Korea is many of the key elements of the economy are still run by the chaebols, the big companies, and they're likely to come through, especially as they're global companies. So I think while a great deal of political turmoil is affecting the markets, is affecting domestic confidence, there is a large element of the economy that will still carry on being relatively strong.
All right, Dr. Harris, I appreciate your insights. Thank you so much for speaking with us. Richard Harris, their Chief Executive of Port Shelter Investment Management.